Hello everyone. In this video I'm going to teach you the hidden formula that will help you trade V75, volatility 75. I'm going to teach you how this works. Before I continue, if you have not subscribed to this channel, make sure you do that, because we not show you like a child until you become rich. That's how this channel works. Okay, so all you need to do is to subscribe and share this video to as much people as you can, because doing that will make YouTube give more priority to this channel, and those friends will never forget you. So before I start, what is V75? V75 is the highest volatile asset in the volatility market. 1 unit of V75 is measured in, you can see this number. If you count the whole part, is up to 7 digits. Some years ago it was around 5 digits, but now it was around 6 digits, but now it's up to 7. It has entered $1 million plus. Okay, and day by day the price keep increasing. In fact, I would say it is on a yearly uptrend, because as of last year it was less than $900,000. Today you can see this is 1 million plus, 1 million plus, 1 million plus. If you check, okay, it's a very volatile asset. Now, the highest lot size you can buy here is 1. Let's assume I want to buy. This is educational purpose. I have not planned to enter this trade, but if I want to buy, this is where you put your lot size. The highest you can buy is 1, and the least you can buy is 1 over 1,000. That is 0.001. Okay. Now, let's take for instance, if we purchase this asset here, you see where the current price is. Let me put my code net. You know how to get a code net? You click on top here, it will show. So this is the code net. I will have to, I want to measure how many pips. Pip means point in price. How many pips, that is the change in price or point in price. So if I hold on the center, then I will touch where the let me do it again. If I hold if I hold on the center here, I have to tap the current position. So if you read that value, the first value is 12. That is the number of candlesticks, and the second number is 5-digit number. That's 7,695. That is the number of pip, or the price change. Okay, meaning that if you bought one lot size, you have made that $7,000 plus. Okay, and if you buy 1 over 1,000, you are going to multiply 1 over 1,000 by that number, which will give you that $7 plus. Okay, that's how this thing works. So, why I'm showing you this is because you must place your take profit and your stop loss. I've not taught you the strategy. I'm just telling you how to manage your accounts. Before I will go on to talk about the strategy, I will talk about it. Stay tuned to the end of the video. So let's continue. Assuming I want to buy this asset, at this point. I'm going to show you. I want to buy this asset at this point. At this point or this point. Then what I will do is I will place a stop loss. Let me draw a line there. I want to buy this asset at this level. Then I will place a stop loss. Let's say I have $10 account and I want to lose just $2. Okay, or I have a $100 account, I want to lose $10. So what I will do is, let's say $100 and I want to lose $10. What I will do is, you will shake. If you are losing $10, you are good, and because at this level your account is too small. Any account from $10 to $1,000 is too small for this type of market. So what you need to do is to, in fact, any account from $10 to $500 is small. So what you need to do is to use the minimum loss cycle, which is 1/1000. So if you have to lose $10 in a $100 account, then you have to multiply the $10 by 1,000. That is 10,000 pips. So you are going to subtract 10,000 pips from the buy price, because we want to buy it. The buy price is 400,536. So you have to subtract 10,000 from this. When you do that, then you are going to, like, let's say let me just buy like this. I don't want to buy, but let me just buy 0.01. As I told you, I assume that I have $10 account or $100 or $500, so you have to use this smaller size. So I will buy. Okay, when I buy, I will go to modify. Okay, I bought. If you look at the top here, you will see this, the buy price. This, okay, that is the buy price. I bought at 1,794,030. So if you subtract 10,000 from here, this is SL. That's where you put your stop loss, and this is where you put your take profit. So what I will do is, I will come here, and when I subtract 10,000 from there, I will have 10,006. Use your calculator to do this. 9,436.06. This is my stop loss. If I go back to the chart, you will see. You see where I place the stop loss. Okay, I bought. You will see CSL. Let me show you. This is SL. I seen it. This thing is SL. So that is the level. Once price reacts, see the current level of price. The price is here. Let me show you. This is price line. This is it. So once price hit this, it will close my trade. I will only lose $10. Okay, but if you fail to put it, the price can move down from this point to this point, and you will lose all your money. So now, what if the price goes in my direction? Where will I put my take profit? If you want to put take profit, and you have to consider the direction you are buying, so that you anticipate the market to go up. So you place your take profit at zone where there is swing, like where the price changes direction to the downwards, like change against you. Since you are going up, this is where price change. you can put your stop loss at this level. Okay, another place you can put your stop loss is you can do it by analysis. Like you have to have a kind of reward to risk ratio. Like you want to risk $10, then at least you have to get 2 times. So you need to add 20, like you have to do 2 times 10,000 points. So when you do that, that is 20,000 points. So you are going to add it to this price. When you add it to this price, you want to make $20 profit. When you add it to this point, okay, this is the current price. You are going to add it. So we are going to add 20,000. So let's go back to our trade and modify. You see, we're already in profit. Let's modify it. So we are going to add in that take profit line. We are going to subtract. We are going to add because we are buying. We are going to add. Okay, we are going to add. This is very simple thing. If you are going up, you add. Why I subtracted the 10,000 from the price, the current price, in order to get my stop loss is because the stop loss will actually be when the market is selling. So you subtract. That is when the market is going downward. But the take profit is when the market is going up. So I added. So here I'm going to add 20,000 because I'm using reward to risk. I'm using reward to risk ratio of 2:1. That is, my reward will be 2 times my risk. Okay, so that is 2 times $10, which is $20. Then I'm going to divide the $20 by 1,000 because I'm using 0.001 loss side. I'm going to multiply it by 1,000. To get to be added to add the result to the buy price, and in order to get my take profit, use your calculator. Well, when you do that, let me open calculator. Or I believe you can do it. Just add 20,000 to 1 million. This one I have circled 1,794,036. When you do that, what you get here is, let me write it. You will get 1,994,336.06. You place modify. So you click down. So you see we are in profit. So when I go back, you will see where we put our TP. Okay, I didn't look at any swing point. I just use mathematical way. So you put it here. Using your risk to reward ratio. Like you can decide to use 3:1, whereby you are making 3 times your risk. It's good. A risk reward of 2:1, 3:1. 4:1 is okay. Don't be too greedy. At times you can open multiple trades and use different risk reward ratio, but make sure your overall risk is not more than 10% of your capital. If you have $10 and you open many trades, placing your take profit at different height, and you open many trades, then make sure that $10, 10% of $10 is $1. Okay, you should not, the total overall risk, overall stop loss values should not exceed $1, because that what make you a profitable trader. Okay, this is experience. I'm telling you for experience. Okay. So if you like what I'm teaching you, make sure you subscribe to this channel. Make sure you hit the bell notification. Make sure you share this video to a large volume of people. So let's go to the next thing, which is the strategy. Please stay to the end of this video. So see the strategy. I will rush it very fast. You have to go to F. Click on F. Go to main chart, then look for oscillators. Then under oscillator you will see stochastic oscillator. This is it. So I have already done that. When you click on it, set K period to 60, set D period to 1, set slow in to 1. Price field should be close close. Method should be exponential. Styles, men should be 2 peso and light green. Signal should be 2 peso and red. Levels should be level 90 sell. You have to add this. You just type sell, you know. If you want to add level, click on the plus. Okay, it will add. You can click on the plus, it will add. Okay, like I want to add level 20 now, I can click on it, you know. I can click on plus and then type 20 and then say something, let's say you know, sell, buy, something like this. Well, I don't really need all this. Let me remove it. I have already set the ones we need. So 90 sell, 50 wait or take profit, 10 you buy. So the color should be black and 3 pesos. So the next thing you need to add here, you click down, and the next thing you need to add here is, but when you create the stochastic oscillator, indicator window 1 will be created. So click on the indicator window 1 F plus, then look for moving average. On that trend you will see moving average. See, I'm rushing this video, I don't want this video to be longer. This is moving average. Click on it. When you have done that, you get back, you see it. The value should be period 8, shift is 0. The period should be 8, shift should be 0, method should be exponential. Apply to close. Style should be 4 peso black. You click on down. Now, the next thing you need to do is you set your time frame. Please and please, in this V75, since it's a very volatile market, for you to see the truth about where the market is taking you to, use 4 hour or daily. Please, never you use anything outside this. Use 4 hour or daily. So right now I want to use, I will show you how to take entry in both 4 hour and daily, and how to put your stop loss with this strategy. So you see, we are just making profit here, but this is not what I really want to do, because I entered at the wrong time. I just place those buy to explain how you can put your stop loss and your take profit. Now you zoom to the last zoom level, put your two finger on the screen and then scroll together. That is, you zoom to the last zoom level. When you have done that, then you look on the indicator window. This is indicator window. This is indicator window. You look on it. Check when the stochastic oscillator, which is this red line, and the moving average, which is this black line, check when they meet either on the buy zone, which is 90, level 90. I'm sorry, on the buy sell zone, which is level 90, or on the buy zone, which is level 10. You see, this is, oh my God. You people, I want you to buy me a coffee by sharing this video to thousands of people. Anybody that come across this video will become a millionaire. See the point here. You buy at this level because stochastic and moving average has met, and I wrote it there. Buy. Don't worry, let me go back to the moving average so that you understand what I say. Let me go back. You will see what I'm saying. Go to the stochastic, go to levels. I'm going to write this with capital letters so that you see it. Capital letter, sell, okay, buy, okay, so that you know that we are talking something that is real and legit. Wait or take profit. I'm going to show you, okay, in a while. Just be patient, stay to the end of this video. See this as your breakfast, but this is gonna make you rich. You know, that's our aim. It gives us joy to see people rich, man. So that's good. Okay, you see, so this level 90 is sell. When moving average 8 and stochastic meet at level 10, you buy. Now the question is, how do you buy? Do you buy at the market price, just as I have done here, or do you place an order? See, the secret of success here is if you see the two lines, the stochastic and moving average meeting immediately, you have to buy immediately and set your stop loss and take profit as I've told you, or you have to, at times when they meet at this level, they undergo oscillations. That oscillation lead to the formation of wicks. Let me show you. Formation of wicks. Okay, let me show you what I mean by wicks. You see this is a wick rejection. Okay, I just expanded the screen. As I expanded the screen, it seems that the actual, this is, just pay attention here. This is 2021 month break, which is January, February, March, which is March 2021, March 1908. So if I expand and go back, let me expand. Let's go to 2021 0319, 08. Let's shift a little bit. So it's here. Now, if you look here, what I say, let me draw a zone so that you understand what I'm saying. Okay. So this is a zone. This is a zone. The zone I draw, it contains a lot of wicks. So the secret here is you place a buy order. Like when you see the wick forming, place a buy order at a wick is, let me show you what wick is. A wick, let me show you what wick is. Like, let me use this candle as an example. I'm going to use, you see this candle, I'm going to use this as an example, this red candle. Now this is a bearish candle, that is a selling candle. The candle opens here at this level, attend this high, see this high, this level, the end of that up wick, and then closes here. This is where it closes, but it attends this low. Okay, so from the close of a candle to the lower end of the low, to this end of the low is called a wick. This is down wick. This is the tail wick, the lower wick, the low wick or tail wick. Then another wick, we also have upper wick, which is from the up end of candle body. The candle body is this big body, this big part that is not like wick. That is the candle body. From here to here is the candle body. So from here, the end of this body to the high is called upper wick. The end of it is the high. Then for lower wick, the end of it is the low, which is here. So what I'm saying is, if you see this kind condition happening, the stochastic crossing the moving average 8 around 10, close to 10, that is on 10 level zones, on the sell zone, on the buy zone, which is 10, level 10, then you will now wait for a wick. That must be a wick. When you see that wick, then place a buy order at the half midpoint, like half of the wick. Use your eye and get the half. Let me remove this. Okay, I'm going to remove this. You will see that this is the wick. This is one of the wick that form at this condition. Then you have to look at, from here to here is that wick. Then half of it could be here. So this is half of it. You have to place a buy order at 606,324.98 points. That's where you are going to place it. Okay, let's do this practically. 60,600 and 60,660. Okay, let me call it 63.24. Let me just approximate it. 60 60, 63, 60, 63, 25. So I'm going to come here, select my market execution as buy limit order. Then I will put the price as 60. Can I remember it? Let's just type 60, 4, 32, 35. Okay, it's like there is 2 here. Okay, and you can use your pen and write it out before you do. Your loss size should be this 0.001, that is over 1,000. Then let's just place it. We have not placed our take profit, our stop loss and take profit, but that is no problem. So let's type the value again. This is it. So let's place order. I'm just giving you an example. So let's go back to the chart. Yes, exactly, we tried. You see, the order is here. So assuming we place, don't worry, I'm coming to set the take profit and stop loss. Assuming we place this order, this candle is a bearish candle, so this candle closes here. It is when it has reached its low that we notice the wick, so we place it at the midpoint. So the next candle formed here, reaches this high, and later it forms here, reaches this low, which means on reaching this low, our price will be activated. That makes you a big boss. That what you call banker. You are not buying like a bank. Bankers buy at weak rejection. So here it opens here and shoot up. I tell you, see how much you should have made by now. Let's calculate from here to here. Let's assume from here to here you should have made, if you check the P value, you should just look down here, 28, and you know where you should look down. You should look here, just look at this value. Okay, that is total PIP is 174,424. So you buy, like if you buy one lot size, if you're a big trader, a huge trader, if you buy one lot size and you have made over $174,000, and if you buy 1 over 1,000, you have made over $174 in how many days? From, if you check the time here, you see this is from March 20 to March 25, in just 2 days. 2021 March 20 to 2021 March 25. So if you are watching this video from the part of Africa, and maybe this is your first time to watch my video in my YouTube channel, I want you to check down the description of this video. You will see a link to this broker, because you can't trade V75 anyhow. You need a broker. So go to that broker, sign up today, and start changing your life. Just buy me a coffee by sharing this video to a large volume of people. That's all. So now we are going to go to the next thing. I've told you how much you should have made. Now I see our market was successful. Our buy prediction, our buy anticipation work. So you have to go back there. Then when you go back, this is where we place this order. You click on it. Don't mind this red. I told you I don't want to place this order. Okay, that is one trade. I just use it to teach you. So you click on modify order. Okay, so assuming I have $10 account, what I need to do, I'm going to solve. I want to, in $10 account, your aim is to get, let's say, risk to reward ratio. When you see such price change in 4-hour time frame, you know that it is going to be very strong and long-term change. So you can say I want to use 1:10 risk to reward ratio. That means you are going to multiply since you are going to your stop loss, that means you are going to, your take profit should be 10 times your stop loss. So let's say you have $10 account and you have to lose $2. You have to lose $2. For instance, you have to lose $2 because at times the nominal condition of losing 10% of your capital may not be realistic, so you can decide to lose 20% so that you have edge, so that even if the price will not reach your stop loss, so that you will not be stopped out of the market. So use a big, if you want to stay long, use a large stop loss. So let me say I want to lose $2, so I'm going to do $2 by $1,000. Since I'm using 0.01 lot size, that will give me 2,000. So I'm going to subtract 2,000. If I subtract 2,000 from here, that will be 64,235. Then I want to make 10 times $2. That is, I want to make $20. Then I'm going to add $20 to the buy price, which is, if I do that, I'm going to I want to make 10 times, that is $20. That is $20. So that $20 I'm going to multiply it by 1,000. That is 20,000. So I'm going to add 20,000 here. When you do that, you are going to have, if you add 20,000 here, you are going to have 62. Okay, and you are going to have 62,235. Okay, and then you click modify. So that's what happened. You see where my stop loss is. You see, the market was activated here, and I placed my stop loss that level. Okay, but in reality, you're supposed to place your stop loss far below the lowest low. Like this is the low, this is like the current low, this is the current low. So you can put your stop loss here. Okay, so that the next low that we believe that the next low that we form will not reach that level. It will be a little bit higher. Like it will be like this low that has formed will be the lowest low. The other lows will just be going, will be making higher lows, like higher. This one is higher, this one is higher, this low is higher, this low is higher. This, the market is now pushing upward. So then how do you, I have told you how to buy. Okay, then how do you sell? Like if you want to sell this asset, see, there is a big sell here. I've told you, you look for wick rejection. This is like you sell when the let me minimize again. I told you. Okay, when do you sell? You sell when immediately the RSI, the stochastic crosses the moving average 8 around level 90 or the sell zone. Level 90 is the sell zone. You sell, but before you sell, you amplify your screen. You look for wick rejection. Now this is the highest wick. Okay, look at the midpoint of it. This is the midpoint. Then place a sell order. Okay, and then place your stop loss and take profit accordingly. You have to do the same thing I have told you before. Then make sure you place your stop loss above this highest high, this high, and then put your, since you are selling, your stop loss should be above. Then since you are buying, and then your take profit should be in the direction of your selling, which is like this. So you put your take profit maybe 5 times or 10 times your risk. Okay, by now you should have been making huge money, because if I calculate from here, because this is where we place our order and it is activated, and the market sold up to this level. The market reaches this level. That's we caught 79,366 points. That is if you bought one lot size, around $80,000, or if you buy 1/1000, around $78 in just how many days? If you shake in the scheme here, I think is a few days. Okay, is a couple of, I don't want to shake that. Do that yourself. Now let's go back. So let's go back. You minimize. So you see, you buy. If you buy, you have made profit. Now The next time when at times your stop loss might not be hit and your take profit might not be hit, then you can take your profit at level. Like let's say you buy, this level. Once you see the stochastic oscillator reaches this level 50, you take your profit. Like this selling, that if had it been I sold at this level, I would take my profit. Like if my profit wasn't hit, if the market didn't hit the stop loss, they take profit, I will take it manually at this level. Once this RS, then this stochastic hit this level. Okay, we have spent almost 5 minutes. Thank you for watching this video. If you have any question, you can comment in the comment section. I wish you good luck. Bye for now.